Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Moti Oswal studios. It's day 2, the day after the union budget announcement. And will there be any lingering impact? Because yesterday, it was just water off the duck's back. The market just shrugged off the capital gains taxes and ended absolutely flat. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And of course, the market is still digesting all of the news flow that came through, right? So let's see. But we have so much corporate action. There's L&T and Axis Bank's numbers today. There's so many stocks to react to as well. So the market has no choice, I guess, but to move on to local cues.
Well, the bears will feel in the last 2 big events, they got both of them correct, right? We didn't get a majority with regard to the BJP. And then yesterday's verdict as well wasn't in favor of the bulls. But look at the market, as flat as can be on both the days.
It's almost as if the budget was not there.
Yeah.
In a way, right? So, but actually, to be fair, the budget really did nothing to add to bullishness or reduce bullishness or add to if somebody was bearish. It really didn't change very much, except, of course, your taxes.
Except, yeah.
Little debatable.
I was like, I think, Prashant, you missed out on a very big part of the budget. No, but yeah, of course, there is a lot of disenchantment because of the taxes. Yeah. You can't, deny that.
No, absolutely. And, it's just that local flows are so strong that it's kind of papering through everything. And it is what it is. So let's just sort of take it straight with where we are at as we begin day 2, the day after the union budget. So incredibly resilient market is what we had yesterday. I was saying this in the afternoon yesterday that if you'd basically been given what was going to happen in the budget, 2 days before, and you would have you were asked what would the market do, how many would have said, well, the market does nothing, it's absolutely flat and just moves on, right? I think that's the power of local flows, retail flows, which have come through. So the changes on your screen. There was a bit of a swoon, absolutely. The Nifty fell about 400 points and then, of course, spent the rest of the day recovering. This is interesting because the India wicks, because if you're thinking about, well, yesterday was just one day and now we'll see the real reaction on day 2 and over the next couple of days. The India wicks fell 18% yesterday to about 12.75. And typically, unless the wicks is showing you, is flashing 17, 18, 20, you're not expecting big moves one way or the other. So that's the reason why I'm saying that should not expect any dramatic day 2 moves different from what we had in terms of yesterday as well. So sometimes it is absolutely reasonable to expect that, day 1 on the day 0 is something, and then of course the real reaction comes through. It's happened. But I think that looking at the weeks, I don't think one can make the case here. Now you have the budget, as I said, which did not really add or take away too much from the market. X the capital gains tax changes. You look at Capex, which was unchanged, and tax revenues. It was largely very little changes compared to what was put out in the interim budget, except maybe things on gold. And we'll talk about specific things here and there. But otherwise, at a broad level, X taxes, there wasn't very much which it did for the market or took away from the market. Overnight global cues are absolutely flat. S&P is down about 0.16%. But the small cap rally is back. And the Russell 2000... it was a very nascent move towards the first half of last week. It fizzled out, but the Russell is back up 1% on a day when the S&P and the Nasdaq were slightly lower. 10-year unchanged, 4.25. Dollar index near 104.5. Oil has ended near the 200-week moving average. It's an important support level. We left off at about 81.56, and I think we are... that's, I think, 10 cents here or there compared to the 200 weekly moving average. Now, Tesla reported numbers after market hours, and the stock reaction is telling. Stock was down about 7-8%, even compared to consensus. So market street expectations of subdued numbers. The numbers are a bit of a miss. Let's circle back to levels then, right? So you have the Nifty, which ended well above the 20-day moving average of 24,312. After hitting a low of 24,074. So that's the kind of recovery that we are sort of talking about. We need to break above. Essentially, if the direction of travel is upwards, you basically have to see the market taking out the earlier highs, which is 24,854. Not very far away either, right? A couple of percentage points to be able to resume the journey higher. Bank Nifty nearly hit the 40-day exponential moving average at yesterday's low of 51,290. Correction on the Bank Nifty. We'll put out the chart later as well. It's like the correction is from a falling channel. So you get out of that channel, and I think market starts to respond positively, and that level there will be 52,650 for the Nifty Bank as well. GIFT Nifty will come up on your screen telling you what the start is going to look like. It's about 50-odd points lower, a slight... okay, I think we'll look at this in 5 or 10 minutes or so. I think the rate perhaps is showing is the rate slightly wrong, and we'll revisit this in a bit from now. But as I said, don't expect anything dramatically different in the market on day 2 as compared to what we've seen in trade yesterday. Sonia.
Absolutely. I think, the market has no choice but to move on from the budget, right? Of course, there is going to be that lingering negative impact because of the budget, because of higher taxes that you'd have to pay. But we're going to move on and talk about some of the stocks that are in the news this morning and, things that you need to watch out for. So let's get straight to it. Consumption stocks are going to be on my radar today because of the kind of valuation headroom that they have, because of the kind of earnings that have come through. HUL's earnings, honestly, were not bad. They were largely in line with estimates. And, if you look at something like a United Spirits, the earnings were actually quite decent. It was a strong operational beat that United Spirits has seen. ITC, in any case, is sitting at a fresh 52-week high. There's been a lot of contribution from there. So this entire consumption piece is something that I reckon could continue to move to the forefront, given the earnings. On the flip side, Bajaj Finance could really disappoint today because of the weak set of numbers that the company posted. The core earnings missed expectations. A lot of brokerages have cut their earnings estimates on the stock. Citi, in fact, has cut their target price to 8,275, which is still well above the current market price, but they believe that the numbers were quite weak and the way forward could be disappointing as well. Yesterday, after a very long time, foreign investors sold in the cash market. So that is something that, is a bit worrying for me. Almost 3,000 crores of selling. And of course, you've seen the US markets under pressure as well, led by tech stocks on the downside. So it's a given that today the market will open in the red. But remember, you are going to have to pay higher taxes. So the best thing to do now is to just find stocks that can perhaps outperform the markets, because you're going to have to pay that extra 12.5% in any case. So I think that makes our work a little, more important, given that this is a market which, in any case, is very hard to find, stocks where there's valuation upside.
So extra 20%. 10 to 12.5 and extra 33% from
15 to 20.
15 to 20.
Yeah.
So, I mean, actually, in percentage terms, it is... but anyway, as you said, just work harder. I mean, there's no other choice.
There's no other choice. You can cry over it or you can move on, right?
Well, that's right. The markets actually took this in our stride, right? So yesterday's reaction was fairly good. I mean, if you told me that we're going to be hiking capital gains and then you went flattish, wow, you would grab it with both hands. But I just want to recap and see in 2018, when at that point of time, the finance minister had introduced LTCJ again for the first time, after a while, of around 10%. On that day as well, the markets ended more or less untouched. It was more or less flattish. In the next 45 days or 35 sessions, so to call it, we had the markets correct by close to around, roughly around 10% or thereabouts. That's the kind of reaction that we saw post the budget in the next 35 sessions. By the end of the year, though, we recovered a fair bit. Now, though we are saying that in the next 35 days, there was a downtick on the Nifty, I'll tell you what, for the broader markets, there was a prolonged period of pain for the next 1 year to around 18 months or thereabouts. So the broader markets took a harder hit. This time around as well, we have taken it in our stride. But in the near term, I'll be looking at, what the index does and also the broader markets, because that's where you made the majority of the money. What about the FI flows? Well, I'll be looking at that closely as well. As Sonia mentioned, they sold yesterday and a largest chunk. And I'll be watching them because they just come back into our markets. For year to date, we have a positive number coming in for the FIs into the Indian markets. But just till last month, actually, that number was negative. So they just started turning around. And then, in fact, we have this piece of news in terms of higher taxation. So we'll be watching that. And also the other emerging markets, actually, in the last 30 days, India has got bulk of the FI flows. And the other two actually haven't got that much. What about our own FNOQs? Yesterday, there was some unwinding of positions on the Nifty Bank. Remember, some part of that will be a rollover as well, because we'll have the monthly expiry that will be playing out. But if you're looking at, the FI data points, the long positions came down by close to around 35,000 contracts, or the short contracts went up by around 20,000 contracts. And after the while, the FI short positions have moved to around 26%. Actually, the next chart will give you a better picture. The FI long positions is actually the lowest we've seen in this series. It's come down to around 2.8 lakh contracts. A few sessions ago, it was at around 3.8 lakh contracts. So the FI long positions have come down substantially. And the client short positions as well, there has been some covering out there. because that as well has come down to around 1.2 lakh contracts, which is the lowest we've seen in this series. So both of them, they have covered their positions on their respective sides. The options data, the PCR is coming back down to the lower end of the range. Yesterday, it went down to around 0.87 odd. Remember, normally it bottoms out at around 0.7. How did this happen? There was aggressive call writing, the 24,500 call, 24,600 call. Both of them added close to around 45 lakh shares out there. But what's giving you some hope is there was some writing even on the put side at around the 24,400 put. Which brings us to the levels. Yesterday's low, both on the Nifty as well as Nifty Bank, become extremely important. So that comes up for you on the screen. A reference point as well will be the 20 DMA on the Nifty, which is at around the 24,300 odd. I've given you the support levels because that's going to be more important in the near term. For the Nifty Bank, yesterday's low was at around 51,300. That's an important mark to look at. And you'll be feeling confident on the Nifty Bank once you get past the 20 DMA, which becomes a bit of a near-term resistance zone. So as of now, we ended at around the 51,800 odd mark, but those are the crucial levels that we are looking at, Sonia.
Okay, well, doesn't look like it's going to be a very good start, but let's see. We'll take it as it comes. First up on the equities front, we have lots of opinion coming through on the markets and, the post-budget situation as well. Vikas Jain of CLSA says the budget saw the government's big focus on fiscal consolidation as FY25 fiscal deficit was budgeted at 4.9% versus 5.1% in the interim budget. And the plan to bring it down to 4.5% in FY26 was reiterated. He says with a clear focus on job generation, the government revealed a new employment subsidy which should also aid low-end discretionary consumption. He says a hike in both short-term and long-term taxes on equity is a clear negative, while the removal of inflation indexation will surely reduce investment attractiveness of premium real estate. He says no change in capex estimates versus interim budget may be a disappointment for investment-linked stocks, which have seen a large rally in the last 9 months.
Okay, this is Venugopal Garre of Bernstein, who believes that budget was a neutral event and what transpired was not entirely unexpected. He says capital gains tax increase is also a non-event. He sees Nifty at a fair value and have witnessed some heavyweight misses in recent earnings. He adds small and mid caps are rich in valuations, which should be potentially impacted as primary market fundraising accelerates. He remains selective overall and continues to have stock picks.
Okay, and let's get you some money market views. Kunal Sodhani of Shinhan Bank says the rupee dropped to a record low against the US dollar, pressured by the drop in local equities after the government proposed raising the tax rate on capital gains. He says a weak Chinese yuan also is putting some pressure on the rupee. The dollar index seems to be consolidating and awaiting the US PCE data. For the USD INR, he says 83.55 acts as a support, while 83.73 acts as an immediate resistance. And if broken, then some stops may be triggered and move towards 83.85 levels could be seen.
All right, well, those are lots of views coming in. Let's get some more. Taimur Beg